This is the weekly review for the week of September 12th to September 16th, as well as this week's Sunday preparation. So, coming into the week for EU and foreign currency, I was bullish, looking for the high of the week to form somewhere between Monday and Tuesday, with the big CPI news happening on Tuesday, um, and obviously bearish dollar. And I was looking for dollar to come down into this weekly um, fair value gap down here. So starting off on Monday, we opened and we rallied um, pretty aggressively in London session, and we had a short play out, but I was not really paying attention to shorts because I had that bullish bias, at least for the beginning of the week, to see dollar retrace into that weekly fair value gap here. Um, but on EU, we had basically this low resistance liquidity run with this fast move up, and then a shift in market structure here, as well as a SMT with GU and the dollar index. And we came back up and tapped premium before running lower, close to the top of or the bottom rather of this low resistance liquidity run where the break in market structure occurred. Compared to GU did not have that break in market structure. It really just consolidated for the whole day. So I think that with this break in market structure, that was probably the tip off that a trade could have been had here, especially with the SMT. But again, I was not paying attention to shorts on this day. But this trade does make sense logically in terms of the price action that occurred. So coming into Tuesday, where we had the CPI news, I saw that we formed these relative equal highs with this old daily high up here and this one. So prior to the CPI news, I was anticipating that CPI was going to raid this buy side liquidity and we would form a mentorship setup here. Um, but that did not happen because we had an SMT with DXY and GU where both those pairs rated their previous day's high. DXY obviously rating previous day's low, where EU just went up into OTE of this previous price swing. So there was nothing we could really do about that. Even GU and DXY didn't form like any setup. It was just a complete nuke down or nuke up in the case of DXY. Um, so in terms of the bias, that was reasonably what I was expecting because I was also looking at indices, and I said that indices wanted to draw up into the order block and fair value gap, and they were probably going to fall off from there, and that's exactly what happened. Um, Now I forgot to set limits here on US 30, which was unfortunate, but it did obviously end up playing out as I was anticipating. So there was no setup or really anything to do on Tuesday. So going into Wednesday, I was anticipating some type of consolidation because after expansion comes consolidation. And I was looking at the fair value gap formed um, from the CPI news, and I was looking at that as a low resistance liquidity run. So I was looking for longs on Tuesday, at least a short term scalp, and we got a clean setup in London session. But then in New York, which is obviously the session that I trade, the setup that formed basically fell through. And I've seen this a couple times, and I'm trying to find a good way to note it in my journal, that London will form the setup, but then New York, where I anticipate the higher low to form, and the setup that forms there doesn't play through. So we had the SMT here in London with GU, and obviously the short-term bias here is bullish because we have a huge fair value gap that formed on Tuesday. And we had the break in market structure with displacement and come down into the fair value gap here. So this makes sense. And then targeting whatever low-hanging fruit liquidity you want to target. So the setup that occurred right after the SMT and the raid played out. But then here in New York, I was looking for a retracement into discount on both EU and GU, whichever one gave it. And EU was the one that gave it. Because GU never made it into discount, right? And then this was just the high right below the low resistance liquidity run, or the fair value gap rather. And I was looking at the same setup on EU where we had this displacement up after a raid here in discount and in the order block. And we obviously got filled, but then we just rolled over instead of trading higher. And I was looking to take a partial here with a final take profit here, which GU hit the final high right below the fair value gap, but EU did not hit that, the final high here before the fair value gap up here. So then coming into Thursday, because we had that SMT where GU tapped this high and EU didn't, and then we also had this SMT here with Asia high and this displacement down, and we also formed these equal lows here with Tuesday low and the low in London session here, and I saw this displacement down. I got in at this mentorship setup here, this bearish setup, but obviously didn't play out. We went higher before Friday, ultimately taking those equal lows. So this doesn't make much sense to me. I did note, yes, we had a SMT with previous day's low here, and then London, SMT with London low, where EU made the higher low, and we formed a bullish setup here on M5. So we had that break in market structure, displacement up, return to the bullish fair value gap here in discount, and then we obviously took the high. So we had two setups form here, a bearish one and a bullish one. But just due to the bias being bearish and the fact that we had these equal lows here, I just basically ignored this setup here, right? I could have gotten out at break even, right? Because I was watching all of this live, and I saw that the bullish setup formed, SMT here, and I was, a little bit apprehensive, but I said, the higher time frame bias is bearish, and especially we have these equal lows here. So that's why I just hung on to the trade instead of cutting it at break even. And then I got stopped out here. And then I kind of got into a revenge trade. After this displacement up, I took a long at the fair value gap. That didn't go anywhere, and I just got out at break even here. But on the higher time frame, they held EU in consolidation, right? Where GU was allowed to move lower on Thursday, right? So Wednesday, that's where I expected the consolidation because it was right after the big range on Tuesday. But they held EU in consolidation for 2 days, where GU was just held in consolidation relative for 1 day, right? On Thursday, it moved much, much lower than EU did. And then Friday, I did not do anything. After taking those losses, I was just done for the week. And especially after I saw the equal lows cleaned out here on Friday, we had a very low time frame setup here. Not really something I would take, just because there was no significant rate of liquidity. And then also we didn't quite get up into premium here for a short. We just fell short of that before price went down. But the longs here were pretty clean, simply because of the fact that it was Friday and we formed the low of the week, and then we had this displacement up. So based on the power 3 of the weekly candle, we should anticipate a retracement back into the weekly range. And also, we took the consolidation low here of the consolidation for Wednesday and Thursday, and then we went straight up to take the buy side above these consolidation highs. So the logic does make sense. And then here, this was also a trade that I was just watching as a paper trade based off of the daily power 3 candle. So the Friday high of the day was formed at 11, and then we had this huge break in market structure, or shift in market structure candle here. So that's what got me paying attention for a short just to the mean threshold of the daily range, which did end up playing out. So this was definitely another rough week in terms of having the bias correct, but still taking losses, especially because EU was being held in consolidation here. So, and then one more thing to note, I took a trade on UCAD, which was also a loss on Monday. Was it on Monday? Yeah, it was on Monday. Now Monday was that day that EU, we had that short on EU over here, but I was looking for longs on EU, which meant I was looking for shorts on UCAD. But UCAD ended up forming the low of the day at around 10 a.m. And then we had, again, this clean displacement up. So I was just looking for a power 3 trade, and I got in here, and I was just targeting this buy side at around the mean threshold of the daily range. And I ended up getting stopped out here, and then price ended up coming back up and hitting TP. Same thing with the short here. We had this fuckery of price action, and then it hits TP. So what I was planning on doing, because I just finished watching the ENDS series on YouTube, the ICT ENDS series, and in that he gives a model for S&P, but basically the model is a 1 to 1.3 R trade. So I went back for the last 2 weeks, because in the past 2 weeks is where I've had the bias correct a lot of times, but price would just stop me out like here and then go to TP. Again, the same thing with this on UCAD. So I went back and I looked at all the trades, and if I used that same setup that ICT is talking about in terms of a 1 to about 1.3 R trade, where we're not targeting any specific liquidity. We're just targeting a fixed 1.3R. Obviously, he talks about it in terms of the S&P, so 5.25 points take profit, 4-point stop loss. But I'm just looking at it based on R-wise, what it is. And for the vast majority of the trades that I took in the last 2 weeks, they would have been winning trades if I just used this model. And I think as a developing trader that I am, and any other developing trader, I think it makes sense to use this, where psychologically it's going to be much better for us, because we're going to take, like, I would have taken a win here, right? And then I would have noted in my journal that I was targeting this liquidity, right? But I would have been stopped out, and then it would have hit take profit in Asian session, right? But I would have already gotten a win here because I was just using this fixed 1.3R take profit model. And then the same thing with EU. If I use that same model and put my entry here, stop above the fair value gap high, and then just targeting 1.3R, like that. That would have been a winning trade, but I would have noted I was targeting these equal lows here, right? And my original trade idea would have gotten stopped out, and then we would have hit take profit on Friday. But just because we were targeting low-hanging fruit 1.3R trades, it would have still been a win. And I think that that's going to be much better for my psychology as a developing trader, where I'm just going to take profit at a fixed 1.3R regardless of where I think the draw on liquidity is. So that's what I'm thinking and what's going to be my plan going forward in terms of the trades that I'm going to take. The trades on the low time frame, at least. So looking at next week, I'm thinking that dollar wants to retrace into its daily fair value gap here before going higher, because previous week's high is much closer to where price is right now than previous week's low. I think it's highly unlikely we come all the way down to take previous week's low, especially because indices are extremely bearish, and it makes sense that we have this untapped daily fair value gap up here that we could trade up into before going lower to target these relative equal lows and this relative equal low here. So these two things line up. And with EU, I still have that same bearish bias, but EU already is in its fair value gap. So I'm going to see what happens with EU. We have the FOMC rate change on Wednesday, so that's going to be some crazy news. But I'm going to see what happens. I'm going to remember to set a short limit inside here for a swing trade on US 30. But that's basically what my bias is going into the week. I think that we should have a bearish candle on indices and foreign currency, and a bullish weekly candle on the dollar index. So we'll see what happens this week.